What does a lower loonie mean for Canadians holding U.S. investments? And how will your investments be affected if the loonie starts to rise? You know that a sinking Canadian dollar makes U.S. goods and services more expensive, whether you're planning a weekend getaway, shopping online, or investing. Serena is looking to buy a U.S.-listed stock. She invests 1,000 Canadian dollars when the exchange rate is at 70 cents. Her shares are worth $700 US. Over the next year, the stock's price surges. Now Serena's $700 US investment is worth $1,000. Serena decides to sell her stock and realize her return. Based on her previous exchange rate, she expects proceeds of $1,430. But when Serena checks the exchange rate again, she sees that the two currencies are now at parity. The proceeds of the sale are only $1,000 Canadian, the same amount she originally invested, even though the stock price went up. Serena experienced the negative effects of currency exposure. If the Canadian dollar goes up, the rate of return on U.S. investments actually goes down. However, if you expect the loonie to appreciate relative to the U.S. dollar, there are ways to manage the impact on your portfolio. Most investors know that in order to reduce currency risk, you should diversify your investments outside of Canada, to the U.S. and beyond. How else can you protect your returns? One way is to choose hedged investments, which use derivatives to lock in an exchange rate. This approach helps protect the buying power of your U.S. returns. In U.S. dollars, Serena's investment went up, but the appreciating loonie reduced her gains. A hedged investment would look more like this, helping to protect Serena's profits. Many exchange-traded funds and mutual funds which invest in U.S. stocks have this kind of currency protection built in. But they also carry an additional cost, which can reduce your returns. Since Serena plans to trade U.S. securities, she could also consider opening a U.S. dollar trading account. That way, Serena can buy and sell U.S. securities without worrying about exchange rates. Anytime you invest in the U.S., it's smart to think about how your investments are exposed to currency risk. Using hedged investment products and trading in a U.S. account are two ways to help manage your risk. Ready to do more with your portfolio? Qtrade Investor puts the power of intelligent, informed investing at your fingertips. With Qtrade, you can choose from thousands of domestic and foreign-listed investments for your Canadian or U.S. dollar RSP, TFSA, or other account. Plus, you have access to convenient tools and knowledgeable support to help you manage your portfolio with confidence and ease. Visit qtrade.ca/investor to learn more.